I'm talking about passively investing some money into the stock market. That way you have ownership in the economy, and as the economy grows, so does your wealth. So the way that this works for me is I have a pie like this, and I have a few different ETFs in the pie, and every single week money is automatically pulled out of my bank account and it goes into my passive stock market account, and it's distributed into this pie among the different ETFs. An ETF is an exchange traded fund, and it gives you exposure to a whole bunch of stocks. So now instead of me trying to find the best stock for me to invest in, I have these ETFs. I do invest in individual companies, individual stocks like I talked about in number 2, but this is a separate strategy that I have in addition to that. So that's money that I already have in the market, and that's cash that I put in when I find a good company that I want to invest in. In addition to that, every single week, I have money that leaves my bank account that automatically goes into these ETFs that gives me exposure to the broad general stock market. The whole idea being I'm just putting money into the market because I believe in the future of our economy. And if I believe in the future of our economy, I believe in the future of our stock market. So this is completely passive on my end. This happens every single week. Every Wednesday, I think it is, money is pulled out of my account and it goes into the market. Doesn't matter what day it happens. We just want to make sure it's consistent. And now all I'm doing here is I'm building a separate investment account completely passively. I don't got to do any work to let it happen. And every single week, this account grows bigger and bigger and bigger. So this cash isn't sitting in my savings. It's just going right into the market. And as the market grows, so does my account. The key here is what happens if the market goes down? Well, I don't change anything. If the market goes down, I keep letting this thing happen passively. If the market goes up, I keep letting it happen passively. I let it happen consistently and I let it happen passively because now all I'm doing is I'm putting money in the market and I'm letting the market do its thing. I use a platform called M1 Finance, who's also a sponsor of the Minority Mindset, to do this. And the reason why I like M1 Finance is because it's super simple and it's completely passive. I just set that every Wednesday I want money to leave my account. I set which ETFs I want to own, and then every single week M1 Finance will automatically pull the money out of my account and they'll automatically invest it into my pie of ETFs using whatever distribution I want. So you don't have to do 25, 25, 25, 25. You could do 10%, 40%, 50%, whatever you want to do. And you can just set how many ETFs or stocks you want to invest in. And now this is passively investing for you every single week or every single month or whatever frequency that you want. So I like it because how easy and simple it is, and it's an easy way for you to constantly keep investing your money in the market. That way you can let the market do its thing. You can use whatever platform you want. Do your own research, see what you like best, but if you want to learn more about M1 Finance and you want to see how you can start investing your money like this for free, I'll put the link to how you can learn more and start investing with M1 Finance for free in the description below. Minority Mindset is a paid partner from M1 Finance, so if you use them, we will get compensated, but there's no additional cost to you. The reason why this is important is because you want to have some real diversification. When most people talk about diversification, they have no idea what they're talking about. They say something like, oh, I have a growth mutual fund and I have a blue chip mutual fund or ETF, and so I'm diversified. But all of your money is in paper assets. All of your money is in the stock market. So if the stock market crashes or if something happens to the stock market, which can happen overnight, you can see the stock market fall by 50% in just a day. If that happens, well, now all of your portfolio, doesn't matter if it's blue chip or growth or whatever it is gonna go down. And so you wanna have some diversification. You gotta have the real assets like real estate. You wanna own a real business, and now you have your passive investments, which give you exposure to the general economy and the general stock market, which we've seen over the last century grow by somewhere between 8 to 10% a year. The fourth investment that you need to own is in growth companies. In number 2, I talked about cash flow producing companies. These are more of your established companies that are producing profits. Number 3, I talked about owning ETFs. That way you get general exposure to the stock market. This is all about owning the startups, the innovators, the growing companies. Personally, I've been putting more of my time to learn more and starting to invest more into these companies. This doesn't have to be in the stock market. Again, you can invest directly into startups, or you can invest in startups that are new stocks on the stock market. The whole idea here is you want to be investing in some of the innovation because times are changing. Our world is changing. Our economy is changing. Money is changing. And so if you want to be on the forefront of that, you need to own a piece of these growth companies. And there's a couple ways that you can do that. Either you can know these companies directly and you can invest in them, kind of like what you see happen in Shark Tank. So now you own some equity in these startup companies. You can work with crowdfunding platforms, which allow retail investors, regular people, to invest into these startup companies who are looking for investments, or you can look at some of these startups on the stock market. This investment is a high risk investment. So what that means is there's a big possibility that you can lose all of your money. You can invest your money into a startup that thinks that they're going to be the next Amazon, or that thinks that they're going to be the next Tesla. but then they can go completely bankrupt because they don't know how to manage their money, or they don't have a very good product, or people just don't like the company. But the upside with these higher risk investments is you also have the opportunity to make a whole lot more money, because this is one of the few investments where you can see 100x returns, because now you're investing in companies that are growing, that are innovating, and that have the opportunity to grab a whole lot more market share. If you're just starting off as an investor, this is probably not the first place you want to invest. You want to learn the ropes. You want to start generating cash flow. You need to know how investing works. Once you start to build more of your wealth and you're looking for more diversification and you want to be a little bit more risky, then you can start looking here. One of the easiest ways to mitigate your risk is just to learn. You got to learn about how some of these companies work. You need to understand the industry. You need to know where you want to invest. It took me a lot of time to understand how some of these startups work, how to value them, to understand what type of companies I want to be invested in and what industries I want to be invested in. I'm still learning every single day. But this is something that comes with a lot more risk and the opportunity to make a whole lot more money. And this is something that you want to pay attention to as an investment for yourself. The way you make money here is you're buying a piece of ownership into a company while they're still small, and your goal is that they're going to grow bigger and that they're going to be acquired by a larger company, or they're going to go public, they're going to get an IPO, and now you have the ability to sell your shares. So you might be buying your shares at $2 a share, and when somebody comes and acquires this company, or if they go public, you're hoping that now you'll be able to sell your shares for $20 a share or $200 a share. It really just depends on the company. Again, high risk, high potential reward. The fifth investment that you need to own is real money, or otherwise known as gold and silver. Our dollars are fiat currency, meaning they are just pieces of paper that are printed by the government and the Federal Reserve Bank. Now, this is good if you understand money and if you're financially educated, because it creates more inflation, which means if you own assets, if you own the means of production, you get to make more money. It's not so good news for the unfinancially educated, because now you're the one that's paying the price through inflation, also known as a hidden tax. Now, I don't say this to scare people, but if you run into a situation where you print too much money, well, then the dollars that you print become worthless, because people no longer just want to work for paper. They want real money. Everything has a lifespan, from people to economies. And the thing that has caused many great civilizations and many great powerful economies to crash in history has been excessive money printing. The ancient Roman Empire had an economy built off of silver. But then when the government didn't have enough silver to expand their operations, to expand their military presence, to invest into their own community, that's when they started debasing the silver. They started mixing the silver with other metals, and people realized eventually that this silver that they were getting, the fake silver, wasn't real money. So then people wanted more money. And in the beginning, if you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.